Welcome to today's webinar, provided by Solarplaza as a prequel for our Making Solar Bankable conference, which is jointly organized with FMO and taking place from 18 to 19 February in Amsterdam, the Netherlands. This webinar is organized in collaboration with Bloomberg New Energy Finance, and in the coming hour we will learn a lot more about the global frontiers for solar energy investment, and this is based obviously on Bloomberg's Climatescope assessment. My name is Tom van Dorp. I'm working at Solarplaza since 2010 and currently responsible for the event on Solarplaza side. I'll be moderating this session today, and in a minute I will give you a short introduction of our company Solarplaza and our upcoming event as well. First, I want to give you an idea about what to expect in the coming hour, and therefore I will quickly run you through today's agenda, but maybe a little bit of background. Climatescope is an assessment of emerging market investment environments for clean energy. That's been running for the last 4 years, and Bloomberg will today present insights from Asia, Africa, and Latin America that pertains to solar. So the first presenter will be Nico. He is an associate from Bloomberg New Energy Finance based in London, and he will also later on in the session present, he will first start with a global overview and then also present the Africa insights. We also have Maggie Kwang from the Singapore office. She's an expert on the Asia overview. And last we have Lilian Alves from Brazil. She's based in the Sao Paulo office of Bloomberg, and she will present the LATAM insights with us today. And we will, of course, end with a Q&A, so feel free to leave any questions in the chat box at the right side of your screen. We'll be happy to take them into account, and we definitely have time to address those. Some practical questions, notes. The presentation slides will be available afterwards. As I mentioned, questions, please use the chat box on the right side of the screen, and any technical issues you might face, we have a technical support desk available who will try to help you to solve those problems immediately. You just have to use the chat box at the right side as well. Well, since we've reached you with the promotion of this webinar, I assume you all know Solarplaza. Still, for the people who are not completely aware of our activities, a short introduction. We're a global information platform for the solar industry, founded in 2004, and our mission is to empower professionals in solar business development by building the most valuable solar network. And our main product in this is due to conferences and trade missions that we organize globally. As mentioned, this event is a prequel of our Making Solar Bankable conference that focuses on emerging markets, in this case Africa, Asia, and LATAM. And the goal of this event is to bring together developers, EPCs, and IPPs on one side, and financiers, banks, and investors on the other side, to have the discussion about solar in emerging markets and its bankability, and to hopefully unlock more capital to develop solar in these markets. Just a little bit of background, we're doing this with FMO. I guess you all know FMO, but just for your information, FMO is a Dutch development bank established in 1970, and they're expanding more and more into solar investments in emerging markets, and we organize this event jointly. Why? Mostly because our networks have an amazing overlap. Their network is, of course, focusing on the international banking and investors sector, and we have a very strong solar PV network. So that seems to be a perfect match, and the result so far is encouraging. It's amazing. It exceeded all our expectations with already, I believe, 320 participants signed up, and expected to end over 400 participants from, I believe, more than 40 different countries. So just a little bit of background, it's a lot of European stakeholders, because most of the investors and banks, of course, are based there, but there are representatives from all over the world coming to Amsterdam for this event. And the level of attendees is very high. A lot of C-level involvement, but also a lot of heads and directors of all the related departments in companies. And as you can see, so far a vast majority is built up from project developers and financing or investors. Well, I would really encourage you come over to Amsterdam to join us there. It's going to be a great networking event, and of course the content is going to be great as well. Just a quick program overview. We'll start with a pre-conference networking drink on the 17th of February. The event will already take place in 2 weeks, as you can see. The first conference day and then a second conference day within the afternoon networking and leisure activity. Some of the keynote speakers, you might all know these, but there's plenty of other speakers involved. I think we have over 60 confirmed now. A lot of information on the website, makingsolarbankable.com. So just have a look there. And we're glad that we have the support of so many various sponsors from all over the industry. So last but not least, our upcoming events. We do much more events. Not all are as big as this one, but at least as valuable in a lot of ways. We're focusing also on storage more and more. So there's an event coming up on monetizing solar plus storage in Milan. We have our asset management event in San Francisco coming up shortly as well, and another event focusing on solar finance solutions in Africa, Southern Africa in this case. So feel free to have a look around or contact us for more information. I'm going to introduce to you the first presenter, which is Nico Tiaggi. I'm sure I'm not pronouncing it correctly. He is based in the London office and will first present us the global overview. Nico, I'm going to make you presenter now, and I'm going to give you the word. So Nico, can you hear me? Hello, Nico. Nico, you can't hear me at this point. I see he lost his connection. So then, in that case, I suggest that we start with Maggie first until Nico pops up. So, Maggie, is that okay with you?
Hi, Tom. I think Lillian is going to give us an introduction.
Okay, perfect. I'm going to make Lillian the presenter then. My apologies for the inconvenience to all of the participants. Lillian, I'm going to give you the opportunity to share your screen now, and then you can kick off with the first part of the presentation. Lillian, are you with me?
Yes, I am. Thank you for, apologies for the ones that are listening to us for a little bit of a technical problem, but I'll be happy to do the introduction. Again, it's a pleasure to be with you here today to talk about the Climatescope project, something that we've been doing for 4 years now, and it has been a great effort from Bloomberg New Energy Finance, along with some of our partners, the Inter-American Development Bank through the Multilateral Investment Fund, DIFT from the UK government, and USAID from the US government. Today, what we would like to do in this webinar is to present you a little bit about the project, talked about the methodology and some of our main findings globally, and then discuss it in more detail regionally about Asia, Africa, and Latin America. So first, I would like to start with a global overview about the project. As I mentioned before, Climatescope is a project that we've been doing for 4 years now, and for 2 years we've been doing this globally. Climatescope is an index that ranks emerging economies on their investment environment for clean energy. In this research project, what we do is look into 55 of the most relevant economies all over the world, focus on the developing markets and assessing indicators that range from policy environment, power sector structure, current capacity in the country, as well as investment and activities related to greenhouse gas emissions. This is something that is available as an online tool and a public data resource for everybody, and this was thanks to our supporters, as I mentioned before, the Inter-American Development Bank, DIFT from the UK government, and USAID from the US government. The report
Lillian?
And the tool, yes?
We have Nico back online. Do you want him to take it over from here? Shall I suggest that?
Um, no problem. I'll just finish explaining about the
Sure.
project and then I'll hand over
Go
to
ahead.
Nico.
Perfect.
Um, Perfect. So as I mentioned before, this is all available online via www.global/climatescope.org. I really encourage you to access it. Besides the information that we've compiled and the country profiles and data that we've wrote about these 55 countries, you also have policy library available with all the policies that are in place in these 55 countries to encourage clean energy. With that, I'll then pass to Nico, and then he'll continue the explanation about the project.
Nico, you're back online. Can you hear me?
Thanks very much, everyone, and apologies for the technical problem. I guess this is what you can expect of a global technology company. And thanks, Lillian, for jumping in on the first few slides. Maybe just to start out then, as Lillian describes, Climatescope is fundamentally an index and a public information resource, which we hope you will use. And what the results are is in front of you now. It's a ranking by the investment environments for clean energy. So at the very highest level, we saw Climatescope 2015 resulting with China in first place, but then really a diversity in the top 10, so Brazil and Chile from Latin America next highest, and then 3 African countries actually in the top 10 as well, so South Africa, Kenya and Uganda. These are some of the results which we'll unpack shortly. But again, at the highest level, what we really see in Climatescope is a discernible shift towards clean energy in emerging economies. So last year, the 55 Climatescope nations, which really are a proxy for emerging economies, includes all of the largest emerging economies and all of the significant clean energy markets. Those countries collectively installed 50 gigawatts of clean energy capacity, which was more than the OECD nations, which installed 48 gigawatts. I should add that that excludes large hydro, so when we talk about clean energy in this context, we're talking about all the renewable energy technologies, but not large hydro of hydro projects larger than 50 megawatts. Now, China has been a very large part of this story, the global shift towards emerging economies in general. But even if we take out China, which does account for 35 gigawatts, 70% of that installed capacity last year, even without China, we're seeing over 20% growth in terms of the deployment of clean energy capacity. Now, this shift is also borne out in terms of the investment we track. So some of you may have been aware of the investment figures that we released a few days ago. This is our quarterly tracking of clean energy investment deal by deal with our analyst teams around the world. And we just announced our figure for 2015, which was a new record for clean energy investment, almost $330 billion. And what we see there, firstly, is that almost half of that was in solar. So clean energy is increasingly becoming a solar story after much more kind of diverse investment in a range of sectors earlier on. But we also see this increase in the investment in non-OECD countries. So that share overall is up to 48%, again almost half. And then if we look at just investments, these figures include, say, company investments and small distributed capacity as well. But if we look at investment in just large renewable energy projects, utility scale projects of 1 megawatt or above, actually that shares even higher. It's 63% of overall investment is in non-OECD countries, so in the emerging economies. Now, what's driving the shift, and that's what we're really here to discuss, and particularly in the context of solar, overall we have seen extraordinary cost reductions. So another of the things we do is tracking technology costs, project costs, and we're down to a levelized cost of electricity from solar, our global benchmark now around just over $120 per megawatt hour. And of course this varies regionally, but it's a global phenomenon that's shared worldwide, with solar increasingly made up of commoditized products. And so this is a large part of the story, but what we'll do now is kind of look beyond that and look regionally. So just very briefly before we turn to the regions, just to give you an understanding of what we do look at in the national context through Climatescope, we essentially build on 4 pillars. The enabling framework, which includes policy and regulation, and for instance the structure of the power sector alongside specific incentives for solar, but also looks at, say, price attractiveness, the power prices, fundamental demand, that kind of thing. The second pillar is investment, so looking at the deals that I've been describing, and also where the money's coming from. And then we also look at the clean energy businesses in the country, and then we also look at carbon and greenhouse gas management. And these things together, over about 200 sub-indicators, comprise a country's overall Climatescope score. And there's much more information about each of these things and a lot of this data available on www.globalclimatescope.org. So without further ado, let's now turn to some of the regional insight as it pertains to the solar markets. And I'd like to hand over to my colleague in Singapore, Maggie.
Maggie, are you with us?
Yes, thank you, Nicole. Hello, everyone on the line. I'm Maggie Kwan, and I have coordinated the Asia section for Climatescope 2015. I'm very glad to have this opportunity to share with you some of the key findings in the Asia countries. So in Asia, we cover 10 countries: China, India, 4 India subcontinental countries, 3 Southeast Asia countries, and 1 Central Asia country. Although the number of countries we covered in Asia is smaller than that in Africa and Latin America, Asia represents a significantly larger scale of economies and the population. 5 Climatescope Asia countries are among the top 10 most populated countries in the world, and 2 of them among the top 10 largest national economies in the world. In terms of Climatescope global ranking, as Nico previously showed, 5 of the top 15 are actually from Asia. China sits on the top, where India is placed at 5th. Nepal, I just want to highlight some Asia countries here. Nepal is listed at 10th, which is closely followed by Indonesia on the 11th. Pakistan is ranked 13th. Now let's move the camera into Asia. So these 5 countries leave the other 5 countries behind, as you can see on this slide. But if you take a closer look at the individual country scores on this chart, you will find China, India are actually kind of in one group. Nepal, Indonesia, and Pakistan are in another group. And then Vietnam, Bangladesh, and Sri Lanka can be grouped in Tier 3. And then Tier 4 would be including the bottom 2 countries, Myanmar and Tajikistan. It's probably not surprising to see China and India ranked at the top because, both countries started to develop clean energy several years earlier than most of the other countries covered in Climatescope, and they actually have made a huge progress. Particularly China. China has built more clean energy capacity than anybody else in the world. As of 2014. China had over 200 gigawatt of clean energy capacity, and 90% of Asia's capacity is actually built in China. In terms of net capacity growth in 2014, which you can see on the right-hand side of this slide, additions in 2014, China was again a key driver, representing 80% of the incremental market in Asia. India is a smaller version of China from this perspective, but what makes India different is that India has about 25% of the population living off-grid, in other words, without electricity, and the country aims to use clean energy, particularly solar energy, to improve its electrification rate. The new Modi government in 2014 outlined bold ambitions to provide provide power to expand electricity access to its 1.25 billion people by 2019, and also raise its solar capacity target to 100 gigawatt by 2022 from 20 gigawatt previously. So moving down on the ranking line, you'll find other Asia countries have only built a fraction of the amount that China and India have built. However, on a proportional basis, these smaller Asian countries have actually added as much renewables as China and India. For example, Vietnam and Sri Lanka, they have added more than 10% clean energy to the initial capacity base. And Pakistan installed 141 megawatt. That country actually increases clean energy capacity by 62%. Almost at the bottom, Tajikistan, that country nearly doubled its clean energy capacity from previous year by adding 57 megawatt. Now, putting the clean energy component into the broader energy system in Asia, as you can see on this slide, overall, in Asia, the share of fossil fuel in total power capacity has been consistently reducing over the past 6 years because of the renewable energy. Then on the right-hand side, this slide shows you among different clean energy technologies, solar and wind were really the key drivers to the clean energy capacity growth in the past 6 years. A fundamental driver to this development is policy incentives. Except in Myanmar, on the left-hand side of the slide, as you can see, all other countries have either feed-in tariffs or auctions in place to encourage project development. And then high electricity prices are another trigger. So in Climatescope study, these two factors are actually, two key factors over the, another 200 indicators we're looking at to assess the investment attractiveness of the countries in Asia. So regarding high electricity price, Pakistan is a great example to show why high electricity price, matters with clean energy development, because this country is actually it's an economy that has suffered from high electricity price due to high dependency on oil and diesel generated power. So when clean energy is becoming cheaper in a high electricity price market, then people tend to develop more clean energy because at lower cost and also being environmentally friendly. However, one thing to note is that we believe policy incentives would only work in the short term, basically to kick off the investment. And in the longer term, the investment should be driven by energy economics. In other words, how the cost of the clean energy compares against electricity price or grid electricity price. Now moving on to the next slide, I just want to quickly show you how much clean energy investment in Asia has been driven by policies in the past. Because I think the past investment were mainly driven by policies, because the electricity price in these markets are not quite, or in other words, cost of clean energy is not quite competitive against the grid electricity price, which I'll show you later after this slide. The first slide on the left-hand side, total investment by sector. In 2014, as you can see, in clean energy investment surged 40%, and that's primarily driven by solar. And actually, solar investment has the first time succeeded wind investment in Asia in 2014. On the right-hand side is a chart to show the solar, specifically the solar investment by country. So China is a leader. So that's what happened in the past. Going forward, I think solar, with further cost reduction expected, has great potential to become quite cost competitive at a retail grade level. So the first chart here shows you the solar LCOEs we do at we have done at BNEF. So we have global and also regional LCOE analysis at BNEF, which is semi-annual publication. So the one I'm showing here is the H2 2015 LC analysis for Asia. We are currently updating the H1 2016 one. So you know, in a couple of weeks we'll see more updated results on this. But this chart is basically showing you, you know, most of the emerging markets in Asia have already achieved you know, quite significant solar cost reduction. And if you look at the lower end of the range, most countries actually can achieve a low solar levelized cost of energy as I mean, mostly below $100 per megawatt hour, which is not fully competitive to retail electricity price at the moment, but it will be in the coming decade. So just a quick example on Thailand, because here we actually have done a LCOE forecast for a particular country. And as you can see, the average retail electricity price in Thailand at the moment, which is a red line, is pretty much around $130 per megawatt hour. And solar at the moment, 2015, is still slightly higher than that that line. But by 2020, you'll be very competitive compared to the grid price. So that's why we think the region has huge potential. I mean, Thailand is just an example. Many other countries would follow the suit. The Climatescope study also looks at financing cost because that's also part of the energy economics. Here, I'd like to highlight the cost of debt because, as you can see, 6 of the 10 countries in Asia have actually have got cost of debt higher than 10%. This presents a huge challenge to raising funds for projects. And you can see that China has the lowest cost of debt, and that China has also received the most investment. So obviously, high cost of debt is a challenge. It's a big it's a big hurdle to investment. Finally, I'm well of time. I'd like to touch on value chain because this is also essential for deploying clean energy in emerging markets. China once again received the full score on this, no change from last year. It has the most complete value chain in Asia, probably also in the world, because it has a very solid manufacturing base, particularly on the solar side. You know, all the big global leading solar manufacturers, the listed companies are in China. China is also the price setter, I think China will be able to drive the cost of solar further down on a manufacturer basis. Then Pakistan also deserves a highlight because this country, as a very new clean energy market, is ranked high on this parameter, and then improved further in 2014 compared to the previous year because of quite effective feed-in tariff introduced in the past couple of years. A lot of the projects are being underdeveloped, and more distributed clean energy services providers and financial institutions have joined the market. So I guess time is up, so I'll end it here. But welcome for questions, and we can discuss more in the Q&A section. So thank you, and I'll hand over back to Tom.
Thanks, Maggie, for this very clear and insightful presentation. I suggest that we leave questions for the end of the session, but I want to emphasize to the audience that there is an opportunity to ask questions in the chat box, and please do so because we do have time for questions at the end of the session. And I believe there's a lot of things related to this that might make just sense to get more clarity about. So thanks, Maggie, and I now give the word to Nico, who already is a presenter.
Thank you. So when we look at the Africa results for Climatescope, as I've already mentioned, we have South Africa, Kenya, and Uganda in the global top 10. Now, South Africa is really a story which I expect most of you are aware of, which is the extraordinary and kind of globally significant investment flows that the country's auction program has attracted for the last 4 years. So in some ways, no surprise that it's up there, as well as being the region's powerhouse, no pun intended. Kenya and Uganda are interesting cases in that a large part of their results are around the wider business environment and the value chains present in both countries, as well as a selection of incentives. So Kenya has had a feed-in tariff in place for a long time. It has been remarkably unsuccessful in leading to investment in solar. The pricing just has not been adequate as yet, but it has meant that developers have taken an early interest in Kenya. Kenya was one of the countries that saw the earliest investment in clean energy more widely, with investments particularly in the geothermal sector over several years before the South Africa story really got going. Part of Uganda's score, interestingly, is around the distributed energy framework. So some of you may be aware of a program that the country's been running called Get Fit, which is essentially an attempt to make the feed-in tariff attractive and kind of have it topped up. And this has led to a couple of relatively small solar projects being winning bids through that program, and we expect further build-outs in Uganda. Just a couple of other notable mentions and why they scored highly in Climatescope. Nigeria has actually seen very little clean energy investment, but its score did partly reflect an increase on a very low base with a couple of deals in 2014. But more generally, Nigeria has been the site of I'd say the largest recent power sector liberalisation program, and we'll come back to that shortly. Rwanda is a very small country, but one with very large ambitions for clean energy. It also currently hosts, I believe it's still the largest PV plant for Sub-Saharan Africa outside of South Africa, which is, to be honest, it's only 8.5 megawatts. So that gives us a sense of sort of not seeing so much else come through outside of South Africa, but nonetheless still ranking highly. And then Tanzania, the last for kind of an honourable mention. Fascinatingly, a big part of Tanzania's score comes from the distributed regulatory framework for small projects and for mini-grids. So it's a country that took a very early lead in attempting to streamline the processes for developers. Now, the business environment in Tanzania is not particularly easy, and particularly the non-payment by the utility has been an issue. But nonetheless, those regulatory frameworks are in place. So as we've mentioned, the investment in South Africa has been quite remarkable and put it on the map globally. We saw just over $5 billion investment in clean energy in Sub-Saharan Africa in 2015, the bulk of that in South Africa, and indeed South Africa makes up around 3/4 of all the clean energy investment we've seen in Africa, Sub-Saharan Africa, since 2012. Bit of a slowdown in 2014, and that was really related to the delay on financial close of round 3 bids in South Africa. So we saw a kind of a surge again in 2015, which was a lot of those projects coming through to financial close. When we look at this investment picture for solar and break it down by sector, we really see solar making up again the majority of investments in Africa, so up to almost 60%. Again, that's really the South Africa story. So some of the biggest deals in South Africa being both in PV, also solar thermal. And intriguingly, South Africa is one of the last few large markets for solar thermal currently. And where does this bring us now? It takes us to a situation where all of Sub-Saharan Africa's power capacity is under 90 gigawatts. 45 gigawatts of that is South Africa. The vast majority of South Africa's capacity is coal, and indeed South Africa accounts for almost all of Sub-Saharan Africa's just shy of 40 gigawatts of coal. We're actually, as of the end of 2015, we're up to a bit over 3 gigawatts of solar for Sub-Saharan Africa as a total. Again, outside of South Africa, very few utility scale projects, though a number of significant pipelines. One of the aspects of Climatescope that I think is particularly revealing for Africa is what I mentioned about our analysis on the power sector structure. So for us, this is part of the enabling framework. The general idea being that more liberalized power sectors are more conducive to the participation of IPPs and private sector investment. When we look at African countries in general, we see very low scores for liberalization as a whole. You can see Nigeria there and Cote d'Ivoire kind of the exceptions. One of the notable features is that the countries in Africa that have succeeded in attracting clean energy investment are not necessarily those with the most open power sectors. And I think this poses some very interesting questions around the kind of necessary and sufficient levels of liberalization to allow investors to participate. So South Africa is fundamentally not a well liberalized power sector, and that's what you can see here. We've just mapped out what that power sector structure looks like, and we're now getting the addition of independent power producers really for the first time in any significant way. And for solar, that's been very significant. So 2014, the top 3 deals we saw for South Africa were all in PV. In fact, for 2015, they were largely solar thermal, so some even larger, I mean, monster deals for solar thermal last year as well. And I did also just want to touch on off-grid solar. This comprises part of Climatescope. It's also an area that we're increasingly interested in. So we've tracked the investments in off-grid solar lantern and home system companies. These tend to be startups that have not been operating for many years, but are beginning to find increased traction in sales. So we see around sales of kind of cumulatively around 20 million solar devices in Africa and Asia so far. And we've seen investment over just over $500 million in the companies involved in this growing market. Now, of kind of particular relevance here is that a majority of that investment is now in pay-as-you-go solar companies. So we're beginning to see a kind of real traction in answering some of the energy access questions through small-scale solar and the application of those technologies through pay-as-you-go involving mobile money. And then we're seeing the reflection of that on the investor side with these companies becoming increasingly investable. And we're just seeing the start of a new breed of deals where the pay-as-you-go solar companies that have a high demand for working capital debt and to finance their pay-as-you-go offerings through consumer finance are just starting new kinds of debt structures that we see as a potential avenue for investors in the future as well. So it's a space we'll be keeping a close eye on. And with that, I'd like to hand over to Lillian for a bit of Latin American insight.
Thanks, Nico, for a lot of great insights on Africa specifically here. A lot of questions are popping in as well. Maybe a quick one before Lillian starts her presentation. Lillian, just to send you an invitation to share your screen. But a quick question. Got a lot of questions why certain countries are not included, Nico. Is there a particular reason for that? Examples are Thailand, Algeria, Malaysia, Philippines, Iran. Why are these countries not included in the assessment?
The only limitation for us has been in the scale of the work that we've been able to get supported so far. So we're very grateful to the UK, US governments and the Inter-American Development Bank for their support so far. We'd love to extend the work further, and that's something we're looking into actively at the moment.
Cool, thanks. So I'd like to give the word then now to Lillian. Are you with us?
Yes, thank you, Tom. Now I'm going to discuss a little bit about the findings that we have for the Latin American portion of Climatescope. And in terms of the countries that we cover 26 countries in Latin America and the Caribbean, and they represent a total market of more than 350 gigawatts of capacity, including large economies like Brazil and Mexico, and smaller nations like Bahamas, Haiti, Guyana, and even Suriname. So it's really a comprehensive assessment of the region and looking at some of the indicators that my colleagues have mentioned before, such as policies, installations, the investment scenario, value chain, and so on, so we could provide a good picture of what's going on in the region and also what are the opportunities lying there. So here what I wanted to first highlight is the top 10 countries ranked on ClimateScope 2015, our report from last year. And what is interesting is there's a mix of large economies and smaller economies. So you have, for example, in the top three, Brazil, Chile, and Mexico, which don't come really as a surprise since these are the three largest clean energy markets in Latin America. But then you also see smaller nations like Uruguay and Honduras, where you had very specific and targeted policy incentives that really made the clean energy sector in these countries take off, as well as other countries where not much is being done right now in terms of actual commitments in investment for clean energy projects or actual installations, but they present good opportunities given their market size and given some of their say fundamentals, such as Colombia and Argentina, who are on top 10. So now, just to highlight a little bit about some of these countries, we have, for example, Brazil and Chile. Basically, the idea behind some of the growth over here and a very high score has to do with policies that were put in place, mainly auctions that have been driving the development over there. But also in Brazil, you have had very strong local content rules that have spurred the growth of value chain in the country. When we're talking about Mexico, it's interesting that we see it in third position because it still reflects the old power sector structure in the country. Before the energy reform. It would be interesting to assess how the score of this country is going to change moving forward after the energy market reform that Mexico is currently implementing. And then other countries here mentioning a little bit of what they've done in the past, Costa Rica, Peru. Costa Rica is a very interesting example of very high penetration of hydro already, but also interesting participation of renewables, although a little bit of struggle around the support for distributed scale generation. But let me then give you more of the global view about Latin America. So talking about kind of the matrix that we have in Latin America and even sort of piggybacking on the example of Costa Rica, what is interesting is that different from Asia and Africa, Latin America already has a very good participation of renewables in its matrix, really thanks to hydro. Here we see that almost half of the overall installed capacity of Latin America is composed of large hydro plants. However, we see that there's still a very strong opportunity for the transformation of system in the region and really to increase the share of what we consider clean energy for the purpose of climate scope that does not include large hydro. We've seen in the past 5 years that there has been an interesting growth of technologies like small hydro, biomass, but even more importantly, wind and solar. And here, given an audience, it's important to mention that by the end of 2014, the participation of solar was very minimum. You had an overall installed capacity of 700 megawatts. But we see that this is about to change, and we see that there's going to be even more interesting growth for technologies like wind and solar, basically because I think there's two main components that apply for Latin America is that one, the region has very good resources, which makes these technologies very competitive. in the region, wind at grid parity in several countries, and solar almost there. It's already in grid parity in Chile, for example. So really a case where you have very competitive technology associated with important policy mechanisms that recognize the, say, particularities of these technologies, and then adapted policy mechanisms to be able to support, not necessarily through subsidies. Just to give an example, in the 26 countries that we assessed for Climatescope in Latin America, 9 of them have clean energy targets. 13 of them have put in place auction systems where they can contract clean energy capacity or generation. 7 of these countries out of the 26 have net metering policies, in other words, really trying to spur as well small distributed scale in the region, and only 2 countries in Latin America have functioning feed-in tariffs. And when I say functioning, it's because we also have examples of other countries that have retired their feed-in tariff mechanisms. But what's interesting to show is that the idea of subsidies, it's not really in place in Latin America when you're trying to spur the development of these technologies. So here, what I bring to you is our latest numbers for clean energy investment in Latin America. So here we see all the way from since 2004 all the way to 2015. And 2015 was a very interesting year because it was a record year for clean energy investment. At overall 17.4 billion of dollars were invested in wind, solar, biomass, small hydro plants in the region. This chart in particular is broken down by countries. So again, kind of a little bit of a reflection of our top 10. We see that Brazil, Mexico, and Chile, the 3 main markets attracting clean energy investment, followed by Uruguay and Honduras. Honduras in particular is sort of like a new name, but basically driven by the feed-in tariff that was put in place in the country to contract solar capacity. So that has driven a lot of investment in the past 2 years. But again, it really shows that in the past we had a clean energy market that was very much centered around Brazil because it's the biggest economy in the region. But now we really see a move towards diversification and the recognition of the potential in these other economies in Latin America. Now, when we change to the next slide and we see now this division by sector, I think what is really important to highlight is that solar has had a very important jump in investment in the past 3 years, from being a marginal sector with very little money flowing into the region to attracting $4 billion just in 2015. Our expectation is that this number is going to grow even more, but it's very interesting to see sort of how far we've gone in such a short amount of time. And this is really, again, a recognition of the great potential that the region has, but also finding ways to acknowledge how this technology can best contribute to the matrices in Latin America. So in this slide, what I'm showing is the levelized cost of electricity by country in H2 2015. As my colleague Meg mentioned, we'll soon be disclosing the figures for H1 2016. But here even we can already see the level of competitiveness for solar in Latin America. Most of the prices are ranging between $100 and $200 per megawatt hour, but we already see a lot of economies that have solar projects that are competitive below the $100 per megawatt hour range. And this has been even proven in the latest auctions in Brazil, Chile, Panama as well, showing that solar can really be competitive vis-a-vis other technologies. Again, not still in grid parity, but very close to. So one example that I would like to give is for Brazil, just because solar was introduced into the auction systems not that long ago. It was just in 2014, but since then a total of 3 giga of solar capacity has been contracted. In this slide in particular, what I'm differentiating is the value that was contracted in local currency, which is the Brazilian reais, versus US dollars. This is important because Brazil is in a situation of very weak currency. So I really wanted to show the values in dollars so we can really reflect the decrease of price that we've seen in the past few years. And what is interesting is that now prices are very much ranging around $80 per megawatt hour in the country, even in light of all the sort of macroeconomic difficulties, and showing that solar has a very important role to play in Brazil's overall matrix. And again, this was a recognition that solar did not necessarily need subsidies to thrive in the market, but did really need a scheme, an auction scheme that was tailored to its particularities, and it couldn't compete at the same level right now with other technologies, for example, wind. What is interesting is that in the next case that I'm going to show, Chile, where solar is actually the cheapest source available, you see that solar and wind um, compete together. Basically, in Chile, what happened was the government put in place an auction system where electricity used to be delivered within certain blocks of times, which you can see by the colors in the back of the chart. On your left of the chart, you see how much gigawatt hours per year were contracted, and on your right, you see in terms of dollars per megawatt hour what was the average price, and the companies that have won in this auction at the end of 2015. What is interesting is that two of the solar developers that won contracts, they reach very low prices, around a little bit above $60 per megawatt hour, showing that there's really an appetite, but also a very good price that is going to benefit the country overall, but ultimately consumers. So quite important to mention the value that solar is bringing to emerging economies in Latin America. Other countries in the past that have included solar in their auction schemes have been, for example, El Salvador and Panama, and other countries that have embraced this, for example, and that will have auctions in this first semester are Chile again and Mexico. Solar will be able to participate in the first long-term auction over there as well. I wanted to finish my presentation with a slide talking a little bit about our expectation for solar in Latin America. And as you can see, by the end of 2018, we expect that 10 giga of utility scale solar will be installed in the region, and with a particular drive from Brazil and Chile, but soon Mexico as well, with all the other countries contributing. Solar has an important role to play right now, mostly driven by utility scale contracts, but we also believe that there is a very strong demand for small distributed scale, even in off-grid applications, which has been done, for example, in Peru and is currently being done in Haiti as well, something that we were able to assess through the research of Climatescope, but also via empowerment of consumers. Right now, we still see a very small and fragmented, small distributed scale solar market in Latin America. Due to several reasons. One of them that we've assessed on Climatescope is low electricity prices, being them highly subsidized, usually by governments. But we expect that these trends are going to change. We start to see it now, for example, in Argentina. So we hope that in the future, solar, both on the utility scale as well on the distributed scale, will play a very big role overall in the region. With that, I'll pass it on to Tom as we finalize the webinar.
Thanks a lot, Lillian, for this yeah, good insights and valuable overview, and exciting to see LATAM coming up more significantly every year now. I have several questions coming in. The first one I'd like to address is to Nico. A question about Africa specifically. The African Union is promoting an additional 10 gigawatt of clean energy in Africa by 2020. And even at 300 gigawatts of clean energy by 2030. What is your vision on this? How likely are these to be achieved?
They're ambitious. I can only really say that I wish the African Union and everyone else involved the best of luck. I mean, frankly, one of the things we have seen in the African countries that we have studied with Climatescope is that the pace of change it can be quite slow. So a lot of these countries are just embarking on the reforms that they need, either in their power sectors to literally open them up to the participation of IPPs, or for the incentives, the tenders and the feed-in tariff programs with which they hope to contract kind of significant levels of clean energy. So outside of South Africa, I have to say, this has been slow moving, and we have seen a real difference between the level of projects that are announced that make newspaper headlines and those that seem to be anywhere near coming through to financial close and commissioning.
Okay.
So while I see us, making progress by 2020, and that there's ever more attention being given to these markets, some of those figures are highly ambitious.
Okay. In relation to your presentation, another question that came by was I think Maggie had a very interesting overview on the cost of debt per country. Do you have a similar slide for Africa and/or LATAM as well?
We do have that insight. In fact, we should add that, of course, Bloomberg New Energy Finance, our core business is providing insight to our clients. It's really through Climatescope that we're able to make some of this insight publicly available. But please do get in contact if you're interested in learning more about our client services.
Perfect. Okay, so that helps. In the light of the COP, and I'm going to address this first to you, Nico, and then separately to Lillian and Maggie as well. What do you believe that the promises made, that the ambitions shared on the COP21, what will be the impact of the investments on the African renewable energy and specifically solar markets? Do you see some first movements? What are your thoughts?
Look, I'll be very quick on this. When it comes to
I'm losing you for a sec, Nico. Lillian, instead, if you look at LATAM and related to the COP, what are your thoughts?
Sure. I think for COP, we saw interesting reactions from different governments. I think COP helped Mexico pass or at least rush its energy transition law. So that was really important. And even, for example, basically for countries that were already doing and making positive steps, these steps were sort of reassured and new commitments were made. For other countries, even for example Brazil, some of the commitments to me felt really conservative when it came to renewable energy overall. So I think in terms of if COP really made it a push towards more clean energy in the region, I must say that the region was already moving towards that, and I think it was just a place for you to either reassure some of these progress or at least rush some of the legislation that was already sort of being negotiated.
Thanks a lot, Lillian. Maggie, from your perspective, Asia, a lot of things to add to what Lillian says?
Yeah, I think overall COP21 has had a positive impact on the Asia policy makers. So especially, recently Vietnam has actually announced to, reduces fossil fuel contribution to its overall power mix, and that's that's actually regarded a very big movement, positive movement, particularly in the in Southeast Asia, big emerging markets where most countries are using a lot of still nowadays still using a lot of fossil fuel coal, and Vietnam and Indonesia are still the largest coal power plant builders in this region, and Vietnam has announced recently to reduce that from a top level national level policy perspective. That's really regarded a very big big improvement, and the president said actually this is I mean, not the president said. I mean, in general, this is regarded as a result of the recent COP21 in Paris. So, yeah, I think COP doesn't have like a didn't achieve the specific binding targets for each country, but they agreed, individual countries can propose their own targets. So I think that's kind of worked on by a lot of the emerging nations because they've got so many other priorities on the agenda. So yeah, overall, it's a good improvement this year.
Thanks for your insights, Maggie. Just before asking a couple more questions, maybe good for you all to know, I didn't mention this yet, but we also will be going actually with a trade mission delegation combined with a conference to Vietnam. A 3-day trade mission in Vietnam with a 2-day conference in Thailand. So this might be a good way to get further insight into these markets and really get your feet on the ground. Just contact me if you want to have more information on this or other events. Another one I want to highlight as well is that we will be going to Argentina with a similar kind of trade mission combining Uruguay as well, and with a regional conference as well. So this might be good ways to further dive into these markets. Yeah, again, if you're leaving already, I want to thank you for joining. It's been very interesting to see all things coming by, and don't hesitate to contact me in case of any questions. Also, if you have specific questions that were not yet addressed, I will address a couple more, but if they were not addressed yet, you can also contact me about it, and I will bring you in touch with one of the speakers. And hope to see you in Amsterdam, where much more will be discussed. And that brings me to the next question, Maggie. Your slide about cost of debt was, I mean, it's a major deciding factor, of course, for investments in solar and to increase capacity. What, according to your findings, are, for example, hurdles and shortcomings when it comes to financing investments, for example, in India, where the cost of debt is much higher?
Yeah, the cost of debt in India is high, but then India has very low cost of projects. So the capex is very low, which means the equipment is very low. They have local manufacturers. They don't have necessarily. I mean, China modules are already very cheap. But they also have local-made solar modules, which are very cheap. And then labor cost is cheap, so BOP cost is cheap. And then capacity factor for solar plants are very decent because the country is, it's almost, has a lot of sunshine. So, like I mentioned before, cost of debt, cost of finance, in general, is just part of the whole overall project cost. So if they can get low capex and high capacity factors, so the high cost, the impact of the high cost of debt will be offset by the lower cost of other components. So overall, the LCOE for solar in India will be quite low and competitive, especially compared to other countries. So if you look at my chart, probably our mid scenario for India solar LCOE is about 10 US cents per kilowatt hour. But in reality, in addition to feed-in tariff programs in India also has lots of auction programs. Auction mechanism is a very good mechanism to drive down the cost of energy, cost of solar as well. So in India, we have seen, project developers bidding for 6 cents US cents per kilowatt hour or even lower. So yeah, even with high cost of debt, project costs can be quite low. overall.
But you foresee that people will be working around the shortcomings mentioned to get even much lower cost of debt, I presume. Do you see specific initiatives already that work on this, or is it too hard to say yet?
To reduce cost of debt is not that straightforward because you know, depending on, firstly, question is which, so you know, the which currency denominated loan you're using. Here we're quoting double-digit cost of loan is primarily an Indian rupee denominated loan. You know, given that India is a quite faster growing economy, and the Indian rupee is very volatile, so inflation in the country used to be quite high. So the cost of debt would be higher than the other countries. But now with the inflation coming down, you know, cost of debt would be also coming down domestically. You know, globally, if you are using a USD denominated loan, I mean, overall, the Fed rates is still, you know, still there. You know, Fed is not going to, US Federal is not going to increase interest rate that quickly. It's really a matter of the hedging risk. You know, again, depending on the international bank's position in the market. So it's hard to say whether it's, you know, how we can reduce that cost. Obviously, when developers are getting more comfortable with, when financiers are getting more comfortable with projects, then costs would come down. Again, it's a very project-specific question, you know, depending on how good your project is and how depending on how your relationship with the bank.
Yeah, but I mean, in general, I see a lot of initiatives coming up and funds, etc., that are shaped, portfolios that are being built already. So soon, institutional investors will come in the game as well. So I believe financing will become much cheaper in emerging markets. But thanks for clarifying this. It makes sense, Maggie. Thanks for sharing and for your contribution. I want to have a last question to Lillian, and just so that everybody knows, the recordings of this session will all be made available. You'll receive an email afterwards with access towards this, so you can look everything back if you want to, and also the presentation if will be made available, so you can have a further insight into it. Lillian, for the Latin market, the projection for 2018, there was like 3.5 gigawatts solar projected, without a clear breakdown per country. Do you foresee still Chile to be the leading market of newly installed capacity, or do you see a drop down in annual installations in Chile?
Hi, Tom. This is actually a very good question. Just to remind you, that was net installations in that particular slide. We expect that solar in Chile installations will begin to slow down, basically for two main drivers. One, because the opportunity for merchant projects is not as attractive anymore, and now you're mainly either trying to bid via auctions or via bilateral contracts for large consumers, but also because the interconnection between the SIC and the SIN systems, for the ones who are familiar with the Chilean market, the transmission systems over there are not interconnected at this stage, but should be by 2018. That should have an impact on spot prices as well. So we shouldn't see such volatile prices as we saw 2 years ago. So that's our expectation for the Chilean market. For the other main drivers for solar in 2018, we expect that Brazil is going to play a big role. We also expect that markets like Mexico, Central America, and other markets in South America too are going to step up and sort of take this lead that Chile has done in the past years.
Clear. Thanks a lot, Lillian. It makes sense, and I share that opinion. And I want to wrap up this session and first of all thank all the speakers and of course the participants. I think that the Bloomberg analysis was very clear. There is a lot to chew on and a lot to further dive into, but this gave a lot of good insight into where emerging markets are developing and where the next solar opportunity will be. Yeah, again, I really hope that a lot of you will be coming over to Amsterdam to further have this discussion, see how we can unlock further capital for solar in emerging markets, because we're just at the start, and I think if you see the increase of installed capacity to be expected in every continent, it's incredible, and there is a lot to be done there. And I hope we can together make this work. And thanks again for your contribution. We'll keep you updated on further webinars and all other things that we'll be doing. And well, thanks again for your participation. Lillian, Maggie, Nico, thanks again for your great contribution.